Hey there everyone, it's Joe from Bullion Now, bullionnow.com.au, selling you the best bullion bars and coins shipped to you worldwide from Melbourne in Australia. This is your weekly precious metals price analysis where we take a look at the big four: gold, silver, platinum, and palladium. YouTube.com/bullionnow, 14,200 subscribers. We just get multiple subscribers every day now, and it's great to see. Get the big warm fuzzy feeling, the dopamine hit when you hit the big red subscribe button right here, because you're joining the family, you are joining the winning team. All right, if you haven't seen one of these price analysis videos before because you are a new subscriber, I just give my own personal view, not financial advice. I'm wrong sometimes. I'm wrong a lot of the time, probably. I haven't tracked it too much, but I just give you my weekly I give you the weather report, what's happened in the last week, and then I give you my personal feeling. And of course, don't take anything that I say as buying or selling advice, of course. Now, last week, this is gold trading in US dollars. We always use the US dollar price, and it's using the tradingview.com website. We'll take a look at it on the daily time frame. And last week we had that big spike down to 1765 roughly, and this is because after the Fed had done their announcement, a bit of selling on the news, I think it was pretty much. I had expected the price to have a jump, but I expected it to have a little bit more of a jump than it did. I was expecting it to come back up to the 200-day moving average, around about your 1810 kind of mark, a little bit higher than what that it did come up to. Yeah, kind of up to your 1800 mark. We got close to around about 1795, so $5 off, but I was expecting a bit more of a rise in this last 8 days. So now we're on a brand new week, seeing as this is a Monday now when I'm recording this. You can see the week has ticked over, and we're currently a little bit red in the week. Doesn't mean we're going to go down, but we just need to keep that firmly in the back of our minds. I had been talking about a couple of key levels. I do, obviously the big line in the sand is this 1760 mark. I was saying last week that if we broke down to 1750, I still wouldn't be too concerned. It's once we break down through 1750, then I'd be starting to get concerned that we would be seeing lower prices. Lower prices we'd be talking about. Obviously, you'd be looking at this as a level of support. I'm not sure how much of a level of support it would be, though, at 1675. But if that's broken down, or breaks down from there, I'd be looking at 1615, or the big one here, which I think is 1555, 1550. Not saying it's going down, but just need to keep that in mind. I just did want to see that weekly move last week spike a little bit higher than it did. I wanted to see it come up to actually more closely to around about your 1820 mark, which was coinciding with this previous level of support right here. But it did not, and we only spiked up to the 50-day exponential moving average here on the weekly time frame. You can see that little spike up there. Haven't broken above that, so just bear all that in mind. I would still say a trading range at the moment, but really need this level to hold of 1760. Let's call it 1750 to 1760. Really need that to hold. Otherwise, we are heading down. Now, the good thing we're looking at on the weekly, let's see on the monthly, I think it was. Yeah, on the monthly, we are very much in oversold territory in the relative strength index. Although, you can spend quite a bit of time. If you look back here, you can spend quite a bit of time in the oversold territory on the monthly time frame. So that doesn't mean we are definitely very quickly going to get out of the woods and have a spike back up. If you have a look at the monthly time frame, doesn't look great. I mean, I could certainly see it moving down a little bit further before the new monthly candle kicks in. What I would love to see, obviously, though, and we all would, is this become a wick right here. This red candle become the wick on the bottom, an upside down candle, if you want to call it that, upside down candle. And we want to see that move back up, and then that may give it impetus for next month to have a green month. Just stay a little cautious right now, is what I will say. Because we didn't see as quick a move back up to this general area as I would have liked. So that is gold. We've got my targets moving higher. You've got my targets moving lower. I've talked about that. You can pause this video if you want to check out the trend lines and whatnot. Definitely just stay a little cautious at the moment. I'm going to say the same with silver. Stay cautious for the moment. Not definitely saying we're heading down, but just be a little bit wary because we have ticked over into that new weekly candle. So similar thing, we spiked down to just under $26. I was saying something, I think it was about $25.40, I think roughly was the line in the sand for me last time, and that happens to coincide with where we have hit. That's actually based on a very key Fibonacci level. If we take a look back, I think I have to go monthly. Yeah, I do have to go monthly. Again, silver on the US dollar time frame. The old high of around about $50. This is back in, I'm talking about in the 80s now. This is the 80s $50 level, and the about $3.30 roughly in early 1991. And then you've got a key Fibonacci level right there. That is the, where are we? Geez, so many lines now. That is the, it's the 50% level. Oh, right there. So the 50% level between that high and that low is 25.50. And lo and behold, what do you know? On the daily time frame and the weekly time frame, we spiked just around about down to that. So similar thing to gold. Just stay wary for now. I would have liked to have seen silver have a quicker move back up to around about your $26.90 to $27 level. It would have been much more confident to say that we were definitely out of the woods. We are not confirmed to break down yet, but as I said, stay cautious. Where might we be breaking down to? I had given you my previous levels right here of about 24.50 and 23.70 are going to be some key levels of support. And breaking down further, if it's like, oh, no, we're definitely heading way down lower, then I had mentioned my two levels, or my big level right here, of around about your $19 level, I think it was, around about there. Because I believe if we break down through your 21.20 level, we've already seen that a couple of times, so I think it might break down below that. So your $19 level would be the big bottom, in my opinion, in silver in a short-term time frame, short to medium term. But I think silver is looking very strong on the longer time frame. I'm talking months and years coming, particularly because when you take a look at this, it's on gold and in silver too. You take a look at the big cup right there, and this is the handle. It seems to be the handle. So I think the cup and handle formation is still in play at this stage on silver. And one day, I promise I will do this soon, I'll do a long-term macro view for where the prices will be going, I think, in the years to come, in commodities in general, particularly in gold and particularly in silver as well. I'll do a bit of a longer-term one video later on down the track. Stay tuned for that. If you're not a subscriber, hit the big red subscribe button. We are looking at platinum, XPT for platinum. And similar thing, we had that spike down. We've had a decent, actually more of a decent rise back up in platinum than we have in gold and silver, back above this trend line. Let me show it to you right here. I'll do it on the weekly. There we go. Back above, just above this long-term downtrend line. So we've spiked back above that. What I would need to see in order to be confident would be holding above that. And what you would very likely see once you break through a trend line, you tend to see a revisit. Although, here's the thing. We broke through and we had the revisit, and now we've broken down again. Yeah, no, actually, I would expect a quick test, a retest of this trend line. That's where we want to see it stop at. No more further than this downtrend line right there. Breaking down through there tells me we're likely heading back down further. If we are heading back down further, you can pause this video and look at my key levels. The next one, I always get rid of this one and it always comes back. I will get rid of that one. My next key one would be at your $955 level in US dollars would be the next key level of support. And if we are just heading onwards and upwards from here, I have been talking about a few levels and we've got them right here. This is just for the newbies who haven't watched my videos previously. It's for all the new subscribers. Here are my next resistance lines at 15.25 and your next one at 17.30, roughly 17.35. So that is platinum. We just want to hold above this downtrend line at the moment. So that's it for platinum. And finally, palladium. Very similar thing. We have spiked back down underneath this previous level of resistance, which became support right there. We did spike, but a nice quick move back above. So I'll keep this similar to platinum for now. I don't think we're definitely heading lower, but we just need to see it. Stay above. What level would I give that? I would say, again, just so for my new subscribers, I do this pretty much on the fly when I come in the morning. So I'm not studying it full on. I'm just looking at it and giving you my opinion on the fly. I would give that, personally, I would say, well, okay, there's the key one right there. We need to stay above this level here of 25.50. So there you go on the daily time frame. If we see that as a level of support, we bounce off it, then I'd be confident, but breaking below there, then I'd be looking at lower prices coming for palladium, where we'd be looking at, I previously had my level here of the $18.45, $18.50 level would be the next level moving down. Well, the big level, sorry, the next level underneath that would be, above that I should say, would be that previous level of support right here at 21.90 roughly. So if we're moving down, breaking down would be 21.90 and then 18.50. And if we're moving higher, I've talked about this a number of times, again, this is just for the new subscribers, we have the levels of between $4,200 and $5,000. If this is just a short little blip in the next few months and we're heading higher, that's my big target right here between $4,200 and $5,000 in palladium. That's it, gang. Short and sharp, I think. Maybe not the shortest, but still pretty short. So hit the big red subscribe button to join the family. We've got lots of things coming up this week. We'll have another Smithy's Corner this week, of course. Michael is away this week, so you won't get a Michael's mailbox unless he does it himself from his little hideout that he is at the moment. I think he's taking a well-deserved break, well-deserved winter break. But hopefully we'll get an epic unboxing or an epic buybacking. We may do something crazy like, turning kilo bars into dominoes. That was kind of fun. I might see what I can rustle up this week for you guys to keep you entertained, keep you informed as well. Michael may be back with something he does himself, but definitely a Smithy's Corner. And we'll just see what the week holds. There's always something fun happening here at Bullion Now, and head over to bullionnow.com.au for all your best bullion bars and coins. That's it, gang. Stay safe. Have a great week, and we'll speak to you soon.